Hey, this is Awais with OpenTrader, and in this video I want to address a question that we get asked pretty frequently, and that is whether we wait for confirmation in the market and then enter a trade, or whether we simply look for price to get to one of our support resistance zones and enter right there without any confirmation. So the short answer is that we do not wait for confirmation. Once price reaches our support or resistance zone, we look contextually at the market, and as long as the entire picture is looking okay and we expect that support zone to provide edge, we simply enter right there at that price and then let the market work, and then win or lose, we're in at our price. And in this video, I'm going to explain why it's a bad idea to wait for confirmation and why just getting the best trade location is actually going to really improve your bottom line. So when you're waiting for confirmation, some of the problems with it is that it requires a wider stop, and because of the wider stop, it affects your reward to risk, right? Because your target isn't really changing once you're waiting for confirmation. That stays the same, but now since you're entering at a much worse price, your stop usually needs to be a bit wider, which means your reward to risk is not going to be as good. And because your reward to risk is not as good, now it requires a higher win rate overall to actually provide positive expectancy or provide a real edge in the marketplace, right? So now, if you're taking a setup that was providing originally, 2-to-1 reward to risk, so on average, for every winner where you're winning $100, your loss is only 50, right? 2-to-1. Now, if you take that same setup and the reward to risk gets shifted down to 1-to-1, that really changes how often you need to win in order to get a real edge in the market and turn that into a positive expectancy system. So, for example, with a 2-to-1 reward to risk, you only need about a 34 or 35% win rate, roughly, to break even on that strategy. Now, once you drop that reward to risk from 2-to-1 down to 1-to-1, you need an over 50% win rate in order to break even, and then probably, at least about 60% to really actually make money on it, and ideally a little bit even higher than that. So let's take a small example from Thursday, January 31st in the E-mini S&P, and just highlight the the effects of waiting for confirmation and the benefit of just entering at the best price. So contextually, let me just set this up for you real quick. We were looking at a 2-day balance area. At 1493 was the bottom of the 2-day balance. On Friday, we have non-farm payroll out, and the idea was that there was a high probability of responsive buyers entering at 1493 or right underneath 1493, and then pushing price back up towards 1497, which is a heavy acceptance area within the current balance, within the current range. So contextually, that's what the market looked like, and the trade idea was to go long right around 1493, bottom of the 2-day balance, and target 1497. So the potential on the upside was 4 points, and the risk on the downside was 2 points. We typically use a 1.5 to 2 point stop loss on majority of our trades. Now, of course, that changes with volatility, but majority of the times our max stop loss on a given trade is about 2 points. So in this case, let's focus on this area over here when price comes down and breaks below 1493 and quickly gets bought up back in, right? So it puts the swing low at 1492. The S&P gets bought up back above 1493, and now we're looking to enter right at 1493 and targeting 1497. So our entry in this case would be either somewhere around here, or let's say somewhere around here. And if you were to wait for confirmation, then perhaps you would wait until this little consolidation range got taken out to the upside, which happens over here. So now instead of entering at 1493, let's say you're entering at 1494.5, right? When you get this wide range bar to the upside, then that signals that yes, there are responsive buyers down there, and that can be used as a trigger or as a confirmation bar to trigger a long setup, targeting 1497. So now instead of entering at 1493, you're entering at 1494.5, which in this case is only 1.5 points away from where you could have entered if you just focused on trade location alone and did not wait for confirmation. But in this case, because you waited for confirmation, you're entering at 94.5, target is still 97 instead of 93, target 97. So you've taken a setup that had a potential for 4 points with a 2-point stop loss, and now you're entering where the potential is now from 94.5 to 97, 2.5 points, and your stop loss ideally should still be under 1492, right? If you really want to keep it safe, ideally it should still be under 1492 or somewhere in this area, which means you have to use a 2.5 or 3-point stop loss. So now you took a setup which was 2-to-1 reward to risk and shrunk it down to either a 1-to-1 reward to risk or even worse than that. Right? So how does that affect your long-term profitability? How does that affect, just this little change here, how does that affect your bottom line? Well, first of all, you need to be right. You need to have a win rate higher than 50% to make that work. But the other problem with this, aside from win rate, is, just think of how often you've waited for confirmation, jumped into a trade, and then gotten stopped out prematurely or just jumped out of the trade because price went against you, and then saw the market work in your favor. I mean, this has happened, when I first started trading, this would happen all the time. I would get in and then, I'd get stopped out and then the market would run in my favor, right? These are all mistakes we've all made. This isn't, an isolated thing that only a small percentage of traders do. This is common, right? We've all been through that same path. We've all been through the same hurdles, the same challenges, and, our goal really is to really accelerate your learning curve and so that you can rely on our mistakes, the mistakes that we've made in the past, and then hopefully you can just avoid those in your own trading. So in this case, let's say you enter at 94.5, you put your stop down here somewhere below 93, and then you can see that price comes down here, and it's a good chance that just kind of stops you out right to the tick, and then runs up to your target at 97. So psychologically, it's a much more difficult trade to manage because now you're taking a decent amount of heat over here. You enter at 94.5, you're coming down to 93, which isn't a whole lot. It's only a 1.5 point, but it's unnecessary, right? If you had simply taken the trade at the right trade location and not waited for confirmation, psychologically it'd be easier. There'd be a lower probability of you being stopped out and then the trade running in your favor. You would have a better reward to risk. You could enter with a tighter stop, and you wouldn't need an extremely high win rate to actually be profitable in the market, to have a positive expectancy system in the market. So for all of those reasons, we strongly feel that it's very important that you simply take the trade once it gets to your area of support or resistance and not wait for confirmation, because waiting for confirmation for the setups that are going to work, you're going to have a worse reward to risk and you're going to have less profit. And for the setups that aren't going to work, you're going to end up taking a wider stop loss and a bigger loss than you would have taken if you had just gotten in when it was testing your support zone. So that's the little lesson for today. I hope that clarifies things for you, and I hope it really helps you in your trading, and not only financially but even psychologically, because it's a lot easier to manage, for example, this trade when you're in at 93 rather than when you're in at 94.5 or 95. It's a very different trade. It is more difficult to sit through this whole chop while you're in a losing position, right? And then finally, the S&P does tag 97, but now, instead of making 4 points, you made 2 or 2.5, and you had to sit through this chop in a losing trade, which is psychologically more difficult as well. So I hope this is helpful. I hope you take this information and go back through some of the trades you've taken over the last week and apply this principle. See how it would have affected your trading if you had simply gotten in at your support zone instead of waiting for any kind of confirmation, and see how it would have affected your trading psychologically and financially. If you have any thoughts on this topic, please leave them in the comments section below. I'd love to hear your feedback. and we will catch you in the next video.